Hey harvesters, and welcome to the channel where we run simple and straightforward options trading to generate income. My name is Matt, and in today's video, I'm going to go over the trades I executed for November 10th. I'm going to be talking about the individual trades I executed. I'm going to talk about the tickers I invested in. I'm going to discuss some of the thought process that was going through my head while I was making some of those trades. And then we're going to take a step back. We're going to take a holistic view of the project's progress so far. Basically a state of the union of where we're currently at. We're going to talk about the total amount of premium and appreciation I have realized. We're going to talk about some averages of daily, weekly, monthly, and so on. Then we're going to look over week over week, month over month, and then we've only been doing this since about April, so no real year over year data, but I'll give you guys what I have. And then lastly, and most importantly, I'm going to talk about the trades I plan on executing for tomorrow, November 11th, Veterans Day. I'm a veteran. For all the veterans out there, love you guys. I'll definitely repeat this again tomorrow. But the first thing I like to talk about on my channel is my account overview. And here it is at Robinhood. Currently, the account is at $215,444.44. I like to show this just so you guys can get an understanding of what my account looks like in my portfolio. Because when I go over the spreadsheet, the numbers may not be exactly one for one accurate because when I made and updated that spreadsheet, the numbers may be different, but that's where I'm at. And if you look at my current holdings, 300 shares of Tesla, 200 shares of QQQ. The 200 shares of QQQ is going to go down by 100 because I had an assignment for one of my contracts today, and I'll explain it here in a minute. And then my VU shares, the VU shares I'm treating as my 401k. Basically, whatever outside of my company's match, the remaining amount of money I put into VU, use as my 401k, and I use that money basically to borrow against so I can have more capital to use for my actual daily and weekly trades. Cool. Now that we have that off of the chest, let's head over to the spreadsheet. Let's talk about the trades I executed. All right, guys, spreadsheet time. For November 10th, I have realized $4,065 of appreciation and or premium. I would say about 80% of it was premium gain. So let's dive into it. So going into November 10th, I had 200 shares of QQQ, both bought at different points. One was bought in at the 615, and the other point was bought in at the 626.78. And then I also have 300 shares of Tesla going into Monday. I had these assigned from last week from cash secured puts, and then now they had a cash secured put assignment at the 450, 442.50, and then the 440. So now let's start talking about the trades I executed. For my first 100 shares of QQQ, my cost basis was the 626.78. And if you guys follow me for quite some time, my number one rule is don't sell below your cost basis. And if you stay true to that, number one rule is definitely my number one. If you stay and stick to that rule, you won't lose money doing this strategy. So 626.78 buying price. I chose a week-long option on this, kind of what I highlighted last night. The premium for the dailies wasn't enough for me to get excited about. I think it was about $7 a day. So instead of trying to lock in $7 a day every day, hoping the market goes up, I'm going to lock in my premium up front. So I decided to run a week long on the QQQ for these 100 shares. I run my options. Each 100 shares is an individual style of money, and they're independent. I don't take anything else into consideration. I don't look at Robinhood's average cost basis because it throws in your premium gain and also your average price bought. I don't like it. I like to run my own type of tracking because I think it's more accurate and it's easier to manipulate. Not manipulate, but it's easier to keep track of your gains. So for that 626.78 shares, did a week-long option on the QQQ. Usually run them dailies, but the premium was higher, decided to lock it in. So chose a strike price of the 628. When QQQ opened today, it was at the 618.86. So there was about a $10 difference. And the likelihood of this option executing a week from now is at 0.15. So that means that's a 15% chance of it executing. The delta was at 0.15. But I locked in $224 premium, took it up front. End of the trading day closed at the 623.18. So it definitely started making a movement higher. I'm basically about $3 away. And if the market's going to stay green again, I'm probably going to get these assigned at the end of the week. But I don't have a problem with that, because if it is assigned at 628, I also capture a little bit of appreciation gain, about $122. So can't complain about that. Moving on to my next set of 100 shares of QQQ. This I ran as a daily. I had these assigned a couple of days ago, or maybe a couple of weeks ago, at the 615. Then the strike price I chose for today, because QQQ opened at 618.86. Wanted to capture a little bit more upside, so I decided to choose a strike price about $3-4 away. Settled the 621 strike price, made $126 of premium. At the end of this trading day, QQQ closed at the 623.18. So that means my 100 shares of QQQ were assigned at the 621. So basically, I was able to lock in premium, but my upside was capped to 621. So I basically took that upfront premium so that I can cap my gains. But I can't complain too much. I made $600 appreciation. So basically 615 to 621, $600, and then made $126 off of that premium gain. In total, that one trade, I netted $726 off of. So pretty stoked about that. Then heading into my Tesla share territory from cash secured put assignments. So for this first set of Tesla 100 shares, bought it in at the 450. I chose a strike price of the 452.50. So basically, at the end of the trading week, if Tesla goes back up to 452.50, I would have realized $250 of appreciation gain. But then I was able to lock in $643 of premium for this week-long option. Tesla opened today at the 439.60 and then closed at the 445.26. So definitely creeped up higher. And the likelihood of assignment definitely got higher. And for me, when I run my options for my week longs, I don't ever buy back my option. I want to realize my gain. I don't ever like paying back the investor the money I just received from premium. Never for that. I rather just wait on the money, let it expire or let it get assigned. I don't like to wheel it and deal it because there's this feeling of greed that comes over that, hey, if you buy in at that or you buy back the option you just sold, then you could then run another option at that strike price or better. But for me, whenever I think of stock trading, I think of it as an ocean. You're a boat on the ocean and the market fluctuates up and down. At that point, when that option is definitely getting sold or assignment, or you're thinking about buying it back, that's probably the high point of the wave. So the boat's at the top of the wave, but then what happens at the top of the wave? The wave goes by, and then now you're at the back of it. So then it's going to go lower. So for me, I never buy in at the top. I just let it expire worthless or get assigned away. No problem. And if we look over to my results, you're going to see how successful I've been with that type of mentality. And then for my other sets of Tesla, bought in at the 442.50, shows a strike price of the 445. So basically, end of the week, if it were to go to 445, lock in $250 appreciation, locked up $921 of premium up front. So I was pretty stoked about that. So that trade is currently active until Friday. And then same thing with my 440 strike price or 440 buy-in. Chose the 442.50 strike price. For these options, I wanted to, because Tesla is such a volatile stock, I wanted to lock in as much premium as possible because the way Tesla moves, it's very parabolic. There is no graceful, like you're easing into a specific price and following the market. It's either the investors like what they're hearing or they don't, and it goes violently up $10, violently down $10, $20. So for me, I'm locking the premium up front, and if it gets assigned away, I have absolutely no problem with that. But third, 100 shares of Tesla, $1,055 of premium locked up front. If it hits the 442.50, also $250 appreciation. So if my 3 Tesla options hit all of their strike prices, I'm going to realize another $750 of appreciation gain. So that's pretty exciting. On top of this $4,065 I've already caught. And then lastly, I ran 2 cash secured puts, one on the QQQ, one on Tesla. For my QQQ cash secured put, this was more so like a hedge that if the market were to continue heading in the right direction, I would be able to buy another 100 shares at a relatively low price. I chose a strike price of the 612. The premium I made was almost negligible, not that much money, $26 when I made $4,065. Seems very insignificant, but for me, I'm all about those base hits, those jabs that will end of the day win the match. So I'm all for that. And this QQQ cash secured put was expired, worthless. Nothing was assigned, but tomorrow I will probably make this cash secured put a little bit more aggressive. So choose something closer to the closing cost or whenever the market opens, because I just got 100 shares of QQQ assigned. Lastly, my last option I ran for the day, Tesla cash secured put, chose the 420 strike price, same concept as my QQQ. If Tesla were to go down to the 420, so that almost is a $20 movement, I would be able to buy Tesla at another discount, turn it around, and then run covered calls if they were get assigned. And then I also locked in another $470. So I was pretty happy about that. And that's currently active. So all of my Tesla options are currently active until Friday. QQQ, I have 100 shares, expires Friday, and then I have another 100, or I have buying power available to run more cash secured puts. So end of the trading day, guys, $4,065. Pretty excited about that. Let's head over to the other side of the spreadsheet and talk about the project state of the union. All right, guys, you know me. This is probably the favorite part of my videos is talking about the holistic overview. Because if you look at some of my trades on a day-to-day basis or as a daily average, you're like, oh, we look at my daily average, it's about $450. You're like, $450, not that much of a home run. But if you look at how much money I've made in the last 147 trading days, I made over 66,000, closing in on $67,000. That is a ton of money for only trading since April. So not too bad. And that's a net gain of 43.6%. Count was currently at that $215,000. So to make, almost 43% off of a $215,000 portfolio is quite impressive to say the least. And we still have about 34 trading days left in 2025. So we still have plenty of time to stack on that silo of money. But yeah, my trade win percentage winning 98.64% of my trades, 145 winning days. My 2 losing days was when I wasn't strong in my fundamentals of selling below my cost basis. After the second time where I sold below my cost basis and some weird Robinhood wizardry went on, I decided to never sell below my cost basis. I rather take less premium, or I'm going to choose a longer expiration date so that I can lock in my money, but I will never choose a time or a strike price that is below my cost basis. Never, never, never. And my number 2 rule is invest into good investments. If you like it or hate Tesla, great, but I think it's a relatively good investment. Once they come out with their Optimus robot that costs $20,000 and you can take all of your chores away, I'm going to buy it. I don't want to do my laundry ever again. I don't want to do chores. If that thing could weed my yard, I'd have that thing out there 24/7, making it look beautiful. And guess what? It can work 24/7 as long as it needs to get charged. So once that thing comes out, I think Tesla is going to blow out of, it's going to be their most popular item. It's going to even beat their, automotive business and their energy production, like solar panels, batteries, whatnot. And then QQQ, I like. So the last couple of days, and someone made a comment, I was going more into individual stocks like Tesla. Uh, Moving forward, I definitely think I'm going to be doing a hybrid approach, a little bit of individual stocks that I think are, well poised to have decent premium, or they're just good stocks in general. The ones I usually highlight: Tesla, Amazon, um, Google, anything that has to do with cloud computing and the next generation AI. I'm definitely for that, but it has to be in the S&P 500, or usually has to be the top 100 S&P 500 companies. Otherwise, I don't really want to deal with small caps. I don't want to deal with penny stocks. I don't want to deal with up and coming or pre-revenue, because that stuff, there's no predictability with that type of investment. I like to deal with stocks that are, predictable. Cloud computing, a lot of people are adopting cloud computing, a lot of companies, and there's a lot of money to continue to be made there. Energy production for those big data centers, also something to look into. But yeah, and then my QQQ is what I like to run for my dailies. I like to do this to kind of balance out now the individual stock trading, because there isn't as much individual stock risk. So then it's able to weather the storms of market adjustments and corrections a lot better than just a single stock. So that's kind of my thought process mentality with my trading. But looking at some of my numbers after my, talking about the average premium per day, making 454, my average weekly premium closing in on $2,153. Interesting enough, in April, I think I was averaging somewhere between like $800 to about $1,300. But once I've been getting more trades under my belt and understanding the right touch points and the right buying points for specific stocks and ETFs, I definitely have been seeing my gains go up more progressively and a lot more faster. And the more money you have, the easier it is to make money. That's just a reality of life, guys. There's no way around it. Took me 13 years of grinding to get this kind of account. And then looking at my average monthly premium, we've locked in a couple of months now, I think 8 months, 7 months. but we're averaging about $8,000 per month. And for 2025, I'm not going to hit a full year of trading. So I wanted to project some of my estimated return based off my account's performance. And the average yearly premium estimate I have here is at 111, almost 112,000. So the way I came up with this number is I took 200, or this weekly premium, 2,153, multiplied it by 52 because there's 52 weeks in a year, came up with this number. And then I basically compared this to my initial investment of $150,000. That's a 75% return. And what I've noticed from my trading is it's ranged somewhere between 70 to about 111,000, percentage range from 49 to about 75%. So it definitely ranges. Right now, last couple of weeks, the market has been a pretty good bull market. So you can see my account go up, but then there's times when the market has been red for a few weeks, and then that's also brings down my average. So end of the day, trading is like being a boat on the ocean. Waves go up, waves go down. Eventually it'll figure itself out. Cool. Let's head over to my weekly numbers. So now that we are looking at November 10th, we have already hit the 4-digit club on the first day of trading again. So we've hit 10 4-digit clubs in a row. That's awesome. I think the longest streak before that, I think, was 7. So we're blowing it out of the water. Hopefully we can maintain this trajectory until the end of 2025, but hopefully maybe for the rest of this entire project until we retire. But locked in $4,065. And for November, we have locked in, after 6 trading days, $6,326. So that is a massive amount of money. We're about, $1,700 away from hitting the monthly average. I think for the rest of the trading week, I'm probably going to average maybe somewhere between $50 to $100. So maybe by the end of the week, tack on $400 more and call it good. And then next week, we'll see what happens. But end of the yearly tracker, we are still at $66,765 and closing in on $70,000. That's going to be a massive milestone. We hit 60,000 a week or two ago. Then we're going to hit 70,000 a couple of days later. That's crazy. A couple of weeks later. So I'm pretty stoked about that. So let's head over to Robinhood, guys. I'm going to talk about the trades I plan on executing. There really isn't going to be many, but I'll still talk about some scenarios, some different thought processes, so that maybe you guys can adopt that strategy. So now that we're at Robinhood, let's take a look. So the 100 shares of QQQ finally got assigned away. The just turned about 9 p.m. the Pacific Standard Time. That's where I'm at, West Coast. So 100 shares got assigned away, and then I still have the remainder of my Tesla options expiring on Friday. As you guys can see, even QQQ right now is trading at 622.17. So it closed at the 623.18, and it's already regressed about $1. So that's even getting closer to what I sold in at. So tomorrow morning, it wouldn't hurt to just run a cash secured put at the money, right? 622. QQQ about a week ago was at 638, 635 range. So that still would be a $10 discount. And I definitely think it might, market might kind of make a rally back into the holiday time to close out 2025. We'll see if that happens. Don't know if there's any more tax loss harvesting hedge funds want to do in November, but we'll see. So right now, my buying power is at $503,000. So if I wanted to buy, like 800 shares of QQQ and run covered calls on them, I theoretically could. However, I think that's super risky, and I'm not going to do that. Whenever it comes to my margin usage, I only like to use a $1 of what my cash value is. So some consider that 100%, but I don't really. But this number here is the most important number, is the event contracts. So whenever I get my shares assigned away after, running covered call and getting it signed away, I like to run cash secured puts, then refill that number. Sometimes I like to choose strike prices for my cash secured puts that are a lot more aggressive, so I can lock in more premium and then guarantee me buying some shares. And there are some times that I don't like what I'm seeing in the market, and I'll choose a strike price further down the way, still lock in premium, but I'm ideally looking for a better buying point. So right now, with the market being at $125,000, I might run 2 cash secured puts on QQQ, or if I'm frosty, I can just throw another cash secured put on Tesla and lock in probably another couple $100. That would ideally be great. However, like I said earlier, I don't want to go full in on one particular ticker. of course, I would make a lot more money. But then if Tesla tanks, I'm now stuck with one particular holding until it recovers. And that could be one day, it could be 1 week, could be 1 month, it could be 6 months from now. Tesla is all over the place when it comes to its charts. So I don't necessarily trust it going full in on it. Therefore, for this event contracts money, I'm going to run it probably on QQQ. Might even look at SPY to see what some of the numbers look like. Well, let's hit QQQ shares. So to run a cash secured put for QQQ, go to trade QQQ options. And in Robinhood, the way this operates is you hit sell put. And the way a cash secured put works is you have to have enough collateral to buy 100 shares of the investment. So, QQQ at this 622.12, you need about $62,000, $62,200 to buy the 100 shares. But the way it works, investor pays you upfront premium. In the case that the market does regress a little bit, you make that money, and then you basically buy the shares. That investor is offloading the shares at that price to you, and then you're obligated to then buy those shares at that agreed upon strike price. Versus covered call is a little bit different. You own the shares, and then you choose which strike price you want to sell at. If you can either go for appreciation gain or the trade-off is premium. So usually for me, whenever I run covered calls, I choose a strike price 1 or 2 strikes away, so 1 or 2 different dollars. So I'm trying to lock in that premium gain and then that little bit of appreciation, and then I keep wheeling and dealing, and I'm buying and selling a lot of shares quite rapidly. Versus cash puts, it's a little bit different. I like to choose a better buying point, and I usually forego premium for a better buying point. And just for all the people that love to hear deltas, I usually do the 0.2 to 0.3 range for my cash secured puts. When it comes to covered calls, I can't even give you a delta because it's usually $1 or $2 away. It really depends on the premium and where the market's at that point. But looking at the cash secured put, and I would like to run a daily, so 0 days to expiration, whatever you want to call it. So QQQ 622. If I decided to run a cash secured put on QQQ at the money at the 622, I would bag in $155 of premium. And the likelihood of getting this assigned is quite high. Let's take a look at what the delta looks like. About a 40% chance of this hitting. So that's pretty good. Ideally, because I sold at the 621, this is just for my weird investing emotion. I would like to choose the number I sold at. So probably would choose the 621 or maybe the 620 price to run cash secured puts on QQQ. So the 621, let's see what the delta looks like. So there's a 0.34% chance of it executing tomorrow. So 34% chance. Maybe I'll run see what the 620 delta looks like. Yeah, that's within my range of error, 0.2 to 0.3. So I'd probably tomorrow run a 620 strike price on QQQ, at least for one of them. And I still have, a little bit of capital for another. And so because no one really knows what the market's going to do, I'll probably choose something a little bit lower, maybe the 618. Delta's a little bit lower. It's closer to 0.2. So I would make $66 off of this option, $101 off this. So that's $167 for tomorrow. It doesn't seem too bad. But if I wanted to look at Tesla, see what some premium might look like for a cash secured put. This is expiring on Friday, November 14th. Currently, Tesla trading $441.99. If I chose a 432 strike, 30% chance of it hitting, bag $500, and is only a $40,000. So I theoretically can run this 2, maybe 3 times, and I can lock in another $1,500. Something to think about, but ideally don't want to go full in on one particular ticker. Maybe just look at what Amazon has to offer. AMZN, because it's a little bit more steady. It's not as volatile as Tesla. Let's take a look at what some of those Amazon premiums might look like for a cash secured put. It's trading at the 247. So basically you need $24,000 to run this particular option. Delta 15. Amazon had a pretty good earnings, so I think it is poised to look pretty strong. See what this 242.5 looks like 0.23 delta for a $24,000 investment, make $114 of premium. That's debatable. You can run 3 of these for the one price of the QQQ, so you lock in about 300 and what is that? $45, $42. Or you could run QQQ cash secured puts daily. So it really depends on what you want to do. For me tomorrow, I'm just going to run 2 cash secured puts on QQQ, spread out my risk, and that will be the end of that story. So yeah, that pretty much wraps up what I plan to do for tomorrow, what my Monday looked like, and the State of the Union for my current portfolio. So yeah, guys, hope you're doing well. Hope you're harvesting. Hopefully you guys learned something new, and I will see you in the next video.